Hey traders, today is Tuesday, January 6th, and I'm Michael Boutros, Senior Market Analyst with StoneX, here for a quick multi-time frame look at the US dollar. Right into the start of the year, we're looking at a rebound off of support. We dropped more than 2.6% off of those November highs, and we found support in late December at 97.81 into 97.64. You're looking at the objective 2025 low week close, that is the week that the low was registered, the close of that session, and the 618 retracement of that advance off the yearly lows from September. The focus is on this recovery right now. You have major event risk on tap tomorrow with the ADP employment report coming out, and then Friday's non-farm payroll report for a more encompassing look at the labor markets. But we're looking at this recovery now. Key resistance on the weekly chart gives you that 618 retracement of the November decline. That's right at 99.38. And the monthly opening range seems to be, ideally, would be taking shape right above that support. A little bit deeper of a look here at the daily chart shows the extent of that decline. The December opening range break right here on December 10th was picture perfect. Looking for a late month low. We got it right on Christmas Eve on the 24th. That recovery, snapping a 3-day winning streak yesterday right off of initial resistance. The 38.2 retracement of that November decline gives you 98.76. You got the August high day close and the May low all right there. We ran into it yesterday and pulled back. Now, the objective range break that we're looking for the month would be 97.81 into 98.76. That's the larger encompassing range that we would need to clear to get some clarity on whether this is one big massive dollar basing or whether we're going to look for the resumption of last year's downtrend. An even deeper look at the 4-hour chart. Here's what we're scoping out. It looks like we've broken that November downtrend last week, right into the start of the year with that pop, ran into resistance and pulled back yesterday into the objective yearly open. That's now near-term support at 98.23. All things held constant, looks like we have a weekly opening range that's taking shape here right above the yearly open. That range break should give us a little bit more of guidance on near-term directional trend. Again, resistance 98.76, 98.68. If we breach there, it converges on the median line for this new ascending pitchfork. It would open up a potential for a rally towards the 200-day moving average. You're looking at 98.96, just shy of 99. And then again, 99.38 would be that 618 of the drop. If we break below the yearly open, it would necessitate a break of this near-term slope off of last month's low, and that would open up the potential for a resumption of the downtrend back towards the 2018 high, the 618 retracement. Again, that's 97.71 to 97.81. Look for a larger reaction there. If that were to give way on a daily close basis, again, you would expect to see the risk would be for a larger accelerated decline. The next level down doesn't come until last year's low day close, and that's right into the 97 handle proper. So major event risk on tap, like I said. Tomorrow's ADP employment report is supposed to show a gain of 45,000. Remember, we saw a contraction of 32,000 in the previous read. And certainly non-farm payrolls on Friday, we're looking for a print of 55,000. That's off a previous read of 64,000. Watch the average hourly rate. That's supposed to uptick to 3.6%. And unemployment is supposed to downtick to 4.5%. So a caveat there, and specifically in the market that we're in now, where traders are still anticipating 2 to 3 cuts from the Fed, the employment data will be critical. Remember, on the last FOMC release, we got Powell saying that he thinks that the employment numbers are overstated, somewhere in the range of 40,000 a month. So we're going to be really, really zoomed in to see what kind of data print we get over the next 2 days. It's just the first early throws of the December opening range. Stay nimble. I'll try to keep you updated on MB Forex as always. Happy New Year. Let's kill 2026. See you guys tomorrow. Cheers.